Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the day's scheduled events for Wednesday, March 9th. Well, the day starts off with UK industrial production for January at 9:30 GMT. It's expected to improve compared with December's disappointing levels, but it would still show a fairly sluggish start to the year. The manufacturing PMI for January was well within the recent range, but it fell sharply in February, which suggests that business may be slowing. The figure as forecast is potentially negative for sterling, as it would show only a mediocre start for the year. Then at 1500 GMT, the Bank of Canada announces its interest rate decision. The market doesn't expect any change in rates. In fact, the market doesn't really expect any cuts this year from Canada. Now, I totally agree that with oil and lumber prices firming and the Canadian budget due to be announced on March 22nd, the Bank of Canada is likely to take a wait-and-see view at today's meeting and maintain its current stance. The question then is what kind of tone it'll express in the statement. At its last meeting, the bank said that the risks to inflation were, quote, roughly balanced, unquote, while, quote, financial vulnerabilities continue to edge higher, unquote. Now, given the recovery in oil prices and Canadian stocks since the last meeting, I expect them to soften this statement and take a more neutral stance. A shift to a less dovish or more neutral stance could push dollar Canada lower. Finally, at 2000 GMT, it's the turn of the Reserve Bank of New Zealand, the RBNZ. All but one of the analysts polled by Bloomberg expect the RBNZ to remain on hold this time, even though back in January, Governor Wheeler held out the possibility of further cuts. The market does expect a cut sometime this year, just not this month. I too expect them to loosen at some point. Since their last meeting on January 28th, the country's trade-weighted index has risen by 2%, even though the dairy price has fallen by 6%. Meanwhile, inflation expectations keep falling as the country approaches deflation. On top of which, as you all know, the latest news out of China hasn't been encouraging. In the face of these adverse indications, the RBNZ could take a more dovish stance at this meeting, which would tend to be negative for the Kiwi. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.